So in today's video, I want to talk about the 3 layers to a holding company. All right, so you have the parent, you have the division, and you have the subsidiary. I consider these to be the 3 layers to a holding company. Now, hopefully, you've watched enough of my videos. I have hundreds and hundreds of videos about all the ins and outs of holding companies, but just in case you either didn't watch them or just don't remember some of the details, a holding company is an entity that you use to hold other assets. Now, I'm a big proponent of no matter what the operating company it is that you want to have to sell products or to sell services, I'm a big proponent of having a holding company to own that company or those companies. And quite frankly, I want my holding company to own any asset that has value. And whether it's intellectual assets, physical assets, or entities, I want my holding company to own those assets. So when you understand that holding company concept, then you're going to set up your first LLC, or if you already have existing LLCs, you may set up a new LLC, and this LLC is going to be designated as the holding company, which for all intents and purposes will be considered the parent. This is the first layer to your entity structure. So you will stand at the top of the holding company. The holding company by default becomes the parent. Why? Because it is going to give birth to things called divisions, and it is going to give birth to things called subsidiaries. Now, filing and forming the paperwork for the parent company is similar to filing and forming the paperwork to any company. In most cases, it's going to be an LLC. You're going to obtain your EIN number. You're going to obtain your articles of organization with the Secretary of State. You're going to draft an operating agreement. The only nuance to the holding company as opposed to any other LLC is that when you're obtaining your EIN with the IRS through your SS4 form, and when you're obtaining your articles of organization, most of the times there is no designation depending on what state you're in with the articles. There may not be a holding company designation with that Secretary of State. They call them NAICS codes. Georgia, the state that I'm in, they have them, but a lot of states don't have them. So you're going to make sure that the language that specifies what the purpose of this LLC is will be in your operating agreement. As far as your EIN number, there's not going to be a category for holding companies, but you can always specify it in the other section. Just a FYI for you. But the first company, the main company, is the parent company. That's the first layer. The second layer is the division. Now, I'm of the belief that when you're on the come up, meaning that you don't have a lot of assets, you don't have a whole lot of resources. Like for myself, when I started my holding company, my wife and I, we're the owners, so it's a multi-member LLC. I didn't have any assets in my holding company. I didn't have intellectual property, copyrights, trademarks. I didn't have ownership interests in other LLCs. I didn't have nothing. I was on the come up. I was just trying to figure out how to make money that day. So what I did strategically, because of my understanding of this concept, was I created operational divisions inside of my holding company. And these operational divisions were actually services that I provided. So I had consulting, I had coaching, and I had education. So these were courses, this was a coaching program, and this was high-level, high-ticket services. So instead of me creating separate entities, which would be subsidiaries, I decided to minimize costs, minimize the complication of administrative issues, and I just use these as like a supermarket, aisles in my store, and I ran them through my holding company. Now, some people will argue that you shouldn't do business with your holding company. Well, I understand why they say that. But for me, instead of having 3 separate entities, an educational entity, a coaching entity, and a consulting entity, I decided to just get insurance as a professional. There's professional insurance you can get umbrella insurance, general liability insurance. I just elevated my insurance to mitigate my risk, and I ran those intellectual services through my holding company. Now, if I was cutting grass, trimming trees, if I was shining shoes or doing nails or cutting hair, those are risky. Those are volatile. I would have set up a separate entity, but because these were more intellectual services using my skill set, my brain, I was able to just use my holding company to create these divisions. So the divisions are really operational departments that you're using or repackaging products and services to introduce to the market. I personally think for a lot of solopreneurs and small business owners who don't want to get too complicated with multiple entities, I think if the operational activity, if the business activity that you want to introduce to the market in the form of some product or service, if it is digital, if it is virtual, if it is intellectual, it may be better to just begin it as an operational division to lower your costs, administrative challenges, and all the things that come with having separate QuickBooks accounts, separate operating systems, separate bank accounts. You can simplify it by running them as divisions through your holding company. Again, unless they are risky and unless they're volatile. I don't want to get too far in the weeds, but I just want you to make sense of why the layer of a division even exists. Now, even when you don't have these type of services running through your holding company is still going to have some divisions, even if it's just a department inside of the holding company. It could be management that you're offering through your holding company. It could be some type of asset protection that you're providing. You may own intellectual property that you lease to some of your subsidiaries. So someone has to manage it, whether it's you or someone else. So these are actually divisions. But that's the second layer. And then the third layer is the subsidiary. Now, a lot of times the subsidiary is an extension of what was a division. That's why I encourage a lot of entrepreneurs who want to get into the coaching or the consulting or educational space, or they have some type of intellectual assets, develop them as divisions. And when they become adults, you have a proof of concept, they're validated, they're monetizing and making money, it's easy for you to drop them as subsidiaries. But not all subsidiaries are extensions of a division that you created. Sometimes a subsidiary is just a new entity that you created because it's risky, it's volatile. Like my real estate investment and asset management company, it was never a division inside of my holding company because it's real estate. I'm fixing and flipping properties. I'm buying and holding. I'm wholesaling. I'm out doing a lot of risky business with real estate. So I want that activity to be housed in a separate LLC, which is a subsidiary. What makes it a subsidiary is that it is wholly owned by the holding company. So my holding company, which is the parent, in my case, it is a multi-member LLC because my wife and I own it. The subsidiaries are not multi-member LLCs because they're owned by one entity, a single member holding company. So I wanted to at least give you a understanding of the three layers of a holding company so that you can continue to build your understanding of this concept and implement it and execute it at the highest level, maximizing all the benefits that come with having a holding company, having divisions, and having subsidiaries.